Welcome to today's deep dive. Understanding car insurance, liability versus full coverage. Today's essential episode. We embark on a comprehensive exploration of a cornerstone of vehicle ownership and financial prudence. Car insurance, all fine. Shrouded in confusion, understanding your coverage is critical whether you're a newly licensed driver, actively shopping for a better policy, or simply aiming to decode your existing plan. This detailed hour-long guide, Liability Insurance versus Full Coverage, is meticulously crafted to empower you with the knowledge necessary to make informed, confident decisions that align perfectly with both your unique needs and your budget. So buckle up securely. Join us as we navigate the intricacies of these fundamental terms, unravel how they directly apply to your driving life, and illuminate precisely why selecting the optimal coverage ranks among the most significant financial choices you'll make as a responsible vehicle owner. Foundations. What exactly is car insurance? Let's establish a solid foundation. At its core, car insurance functions as a formal contractual agreement between you, a policyholder, and your chosen insurance provider, in exchange for your regular payments known as premiums. The insurance company pledges to cover specific, predefined financial losses you might incur resulting from accidents, theft, or other unforeseen incidents involving your vehicle. Crucially, the purpose of car insurance extends far beyond merely safeguarding your car. Its paramount role is to protect your overall financial stability. Imagine it as a robust financial safety net. Without this vital protection, a single serious accident could potentially saddle you with crippling out-of-pocket expenses amounting to thousands, or even tens of thousands of dollars. Decoding the jargon, liability and full coverage. You've undoubtedly heard the terms liability insurance and full coverage used frequently. While they sound straightforward, significant complexity lies beneath the surface. Let's dissect them methodically, starting with the fundamental option. Liability insurance, the legal bedrock definition and requirement. Liability insurance represents the most basic form of auto coverage and is legally mandated in the vast majority of U.S. states. Its primary function is unambiguous: to cover damages and injuries that you cause to other people or their property. If you are deemed at fault in an accident. Core components, this coverage is bifurcated into two critical parts. Bodily injury liability by. This covers the medical expenses, rehabilitation costs, lost wages in some cases, and even legal fees associated with injuries suffered by others due to an accident you caused. Property damage liability (PD). This covers the costs of repairing or replacing another person's vehicle or any other property you damage in an accident. Think fences, mailboxes, storefronts, or lampposts. The critical limitation. It is paramount to understand this. Liability insurance exclusively covers the other party involved. If you are at fault, your liability policy pays for their damages and injuries, but it offers zero protection for your own vehicle or your personal injuries. Those costs remain your responsibility unless you possess supplemental coverage. Illustrative example: imagine you accidentally rear-end another vehicle at a stoplight. Your liability insurance would cover the repairs to the other driver's car and their medical treatment if injured. However, the crumpled front end of your own car, those repair bills land squarely on you. State minimums and why they often fall short. Each U.S. state dictates its own minimum liability coverage requirements. It's typically expressed in a split limit format like 25/50ths, 25. This translates to $25,000 for bodily injury per person, $50,000 total for bodily injury per accident, $25,000 for property damage per accident. While these figures might appear sufficient initially, the reality of medical costs and vehicle repairs, especially in accidents involving multiple injured parties or expensive vehicles, can rapidly eclipse these limits. Consequently, insurance Professionals widely recommend purchasing liability limits significantly higher than your state's bare minimum to avoid devastating personal financial exposure. Full coverage, unpacking the misnomer terminology clarification. Let's address a pervasive misconception up front. Despite its name, full coverage does not mean you are insured against every conceivable scenario. It is not a single, monolithic policy type. Instead, it's a common industry term referring to a bundle of coverages, typically encompassing liability insurance. As defined above, covering others you harm. Collision coverage. This covers damage to your own vehicle resulting from a collision with another vehicle or object like a guardrail, tree, or pothole, regardless of who is at fault. If you hit something or something hits you. Collision coverage applies to your car's repairs or replacement. Comprehensive coverage other than collision. This protects your vehicle against a wide array of perils not involving a collision. Key examples include theft or attempted theft, vandalism or malicious mischief, fire, natural or arson, natural disasters, floods, hurricanes, earthquakes, hail, falling objects, tree branches, debris, animal collisions, for example, hitting a deer, glass, breakage, windshield chips, cracks, closing parenthesis. Common inclusions in full coverage bundles. Policies marketed as full coverage often incorporate valuable optional add-ons, such as roadside assistance, towing, jump starts, lockout service, flat tire changes. Rental car reimbursement covers the cost of a rental vehicle, while yours is being repaired after a covered loss. Uninsured, underinsured. Motorist protection, UIM. This is absolutely crucial. It protects you if you're hit by a driver who either has no insurance, uninsured, or whose insurance limits are too low to cover your damages, injuries, underinsured. Provider variability, crucially. The precise components bundled under the full coverage label can vary considerably between different insurance companies. Always scrutinize the policy details to understand exactly what is and isn't included. Cost considerations. Liability versus full coverage. Surprisingly, it's the level of protection. Significantly impacts the cost. Liability only. This is generally the most affordable option. Nationally, average annual premiums for liability-only insurance range between $500 and $800, influenced by numerous factors. Full coverage offering substantially broader protection. Full coverage policies naturally come at a higher cost. National averages typically fall between $1,200 and $1,800 per year. The increased premium reflects the greater financial risk assumed by the insurer in covering your vehicle as well as others. Factors influencing your premium for both types. Insurance companies assess risk based on a complex matrix of factors, including driver profile, age, young drivers, especially males under 25, pay more, gender, driving history, accidents, tickets, and even credit score in permitted states, vehicle, make, model, year, safety features, repair costs, and likelihood of theft. Location. Rates are higher in densely populated urban areas, regions prone to severe weather, or areas with high theft, vandalism rates, usage, annual mileage, and primary use commute. Pleasure, business, policy details. Chosen coverage types, limits, deductibles, and available discounts, for example, multi-policy, safe driver, good student. Strategies for managing costs. Increase your deductible. The deductible is the amount you pay out of pocket before insurance coverage activates, for example, $500, $1,000. Opting for a higher deductible like $1,000 instead of $500 can substantially lower your premium. Caution: ensure you have sufficient savings to cover the deductible if you need to file a claim. Seek discounts. Inquire about all potential discounts bundling home, auto, safe driving, anti-theft devices, defensive driving courses, paying in full, paperless billing. Shop around, obtain quotes from multiple insurers. Regularly pricing for identical coverage can differ dramatically. Making the right choice Who needs what? Liability only might be suitable for owners of older vehicles with low market value, for example, worth $3,000 or less, where the annual cost of comprehensive and collision coverage might approach or exceed the car's value. Drivers who own their vehicle, outright, no loan or lease. Individuals with a strong emergency. Fund capable of covering unexpected repairs or replacement. Those seeking the absolute minimum cost while meeting legal requirements. Drivers with a consistently clean record operating. In low-risk areas, full coverage is typically recommended for owners of newer, moderately valuable, or expensive vehicles. Individuals leasing a vehicle or financing a car purchase. Lenders, lessors almost universally require full coverage to protect their financial interest. Drivers who couldn't comfortably afford to repair or replace their vehicle out of pocket after an accident. Those who frequently drive in high-risk areas, busy highways, high crime zones, regions with severe weather or wildlife. Anyone seeking maximum peace of mind against a broader spectrum of potential losses. Dispelling common car insurance myths. Myth number 1, full coverage means I'm covered for everything. Reality, false. It excludes routine maintenance, wear and tear, mechanical breakdowns, and intentional damage. Custom parts or equipment usually require separate riders. Always read your policy exclusions. Myth number 2, liability is enough if I'm a safe driver. Reality, while safe driving reduces risk, it doesn't eliminate it. You cannot control other drivers, falling trees, hailstorms, theft, or hitting an animal. Liability alone offers no protection for your car in these common events. Myth number 3, red cars cost more to insure. Reality, a persistent urban legend. Insurers base premiums on factors like make, model, year, engine size, safety record, and theft rates, not the vehicle's color. Real-world scenarios. Why coverage matters. Scenario 1, liability gap. A driver causes a multi-vehicle pileup. Their liability insurance covers the extensive damage to other cars and severe injuries to others. However, their own car is totaled. Without collision coverage, they receive nothing for their vehicle and face significant financial loss. Scenario 2, comprehensive value. A driver's car is stolen from their driveway overnight. Liability insurance is irrelevant here. Comprehensive coverage steps in, reimbursing the driver for the car's value minus deductible. Scenario 3, UIM, critical. A careful driver is severely injured by a hit-and-run driver uninsured. Without uninsured motorists' bodily injury UMBI coverage, their own medical bills and lost wages become a crushing personal burden. Actionable steps for choosing your coverage. Assess your vehicle's value. Utilize trusted resources like Kelly, Blue Book, KBB, or Edmunds to determine your car's current market worth. Evaluate your financial resilience. Honestly appraise your savings. Could you afford a major repair or replace your vehicle outright if necessary? Consider your risk profile. Analyze your daily commute distance, typical parking locations, street, garage, local weather patterns, and area crime statistics. Understand legal requirements. Know your state's minimum liability mandates. Get multiple quotes. Compare prices and coverage details from at least 3 to 5 reputable insurers. Ask questions. Clarify any terms, exclusions, or discounts you don't fully understand before purchasing. Review annually. Your needs evolve. Reevaluate your coverage each year when your policy renews, especially after major life changes, new car, move, changed, commute, or as your vehicle depreciates. You might need less or sometimes more coverage. A final word on legality and integrity. Meeting your state's minimum insurance requirements isn't optional. It's the law. Failure to maintain coverage can result in severe penalties, hefty fines, driver's license suspension, vehicle registration, revocation, and even potential jail time for repeat offenses. Furthermore, insurance fraud, whether through staged accidents, inflated claims, or material misrepresentation, is a serious crime. It carries stiff legal consequences, including criminal charges, massive fines, policy cancellation, and drastically increased future premiums. Always operate with transparency and integrity. Conclusion: empowerment through understanding. Ultimately, the decision between liability insurance and full coverage is deeply personal, hinging on the interplay of your vehicle's value, your financial situation, your risk tolerance, and your legal obligations. There is no universal right answer that fits everyone. Liability insurance provides essential, legally required protection for others at a lower cost, but leaves your own vehicle and well-being financially exposed. Full coverage offers a far more comprehensive safety net for your assets and peace of mind, albeit at a significantly higher premium. By thoroughly grasping the distinctions outlined today, mystifying the components, costs, and critical considerations, you are now equipped to approach this vital decision with clarity and deep confidence. Choosing wisely isn't just about protecting your car. It's a fundamental step in safeguarding your financial future against the unpredictable twists of the road. Thank you for dedicating this time to deepen your understanding of car insurance. We sincerely hope this comprehensive guide has illuminated the path forward, empowering you to select coverage that provides genuine security without undue financial strain. If you found this exploration valuable, please support our channel by liking this video, subscribing for more in-depth financial insights, and sharing it with fellow drivers who might benefit. Until our next journey together, prioritize safety. On every trip, ensure you are adequately protected and never stop pursuing knowledge that empowers your life. Drive wisely.